Hey everyone, welcome back to another episode of Stock Talk with David. I'm David. In today's video, I wanted to discuss Snapchat. So Snapchat as the company, as the stock has been very popular recently with their earnings just coming out. Big Tech reported last week, and so it's kind of presented a really interesting opportunity. And so we've been talking about it a lot in the Discord. And so I want to go through talking and discussing the macro, going into the industry comparisons, the actual stock, some guidance and estimates from the company, and then actually how to put the trade on, how we're putting the trade on in our group. And so, if the macro, we know that the yields are rising in the treasury bonds. What that is doing is it's putting significant pressure on some of these non-profitable companies. We see that the reopening of economies, travel, and advertising. So we know this is all happening very, very quickly. The economy is going, the money is being taken from the super saver mentality of the consumers, being injected back into the economy. Presents an opportunity for the firms because they want to advertise and get all that money back from the people that have it. So what that's also doing is it's inflating the price of goods and services because demand or supply can't meet demand. However, increased consumer sentiment, we're seeing a lot of that continuing, as well as an increased activity in e-commerce and the consumer spending, obviously. So the reopening is happening, especially as we reach this herd immunity for the vaccine and the virus. As far as the industry goes, the competitors are just the big guys. It's the Facebooks, the Twitters, the Pinterest. You can include TikTok in there, although they're not public yet. And so these companies generally included some strong earnings and the guidance. These companies, they are more mature, though, in terms of average users and new users signing up for the platforms. So you'll see a steady increase or a steady incline of growth, with the exception of Twitter, which is actually starting to lose customers and lose users. So something interesting to look at. However, Snapchat hasn't completely captured a lot of these users just yet, and so it does provide a significant room for growth. So moving into the positive and negative catalysts, what are some things that can move this company forward? What are some things that can draw it back and lower the value of Snapchat? So starting with the positive first, we know that companies are seeing a higher ROI on the ad spend compared to other platforms. So it just means that companies that are most effective, they're doing the best with Snapchat versus any other platform right now. Millennials, the Gen Z, they would rather communicate through images rather than text. They want to show off where they are. If they're somewhere, they want to point out, hey, I'm at this really cool place. I've got this really cool new toy that I just bought. They want to show it off. That's how they feel good about themselves. Snapchat is the number one place to do that. It's super quick. People can look at what you're doing. Another interesting thing is that Snapchat is heavily invested into augmented reality. And so now everyone knows that you take your phone, you can scan it around, you can create this whole virtual world. Companies are using that to do things like try on a pair of glasses, try on a new pair of shoes, look at this new amusement park thing, like all these crazy things we thought weren't possible. They're possible now. And Snapchat really seems to be right on the edge of it, especially for a social media company, which is quite interesting. Also, they're trying to push more creators and influencers into the company. They're trying to get more of the attention of the age demographics. And we're also seeing that Snapchat has a lot of the users in the developed world. So they're shifting the experience and shifting some of their users into the developing countries, meaning the countries that aren't quite up to speed with the US or Europe, especially. They're getting faster phones, they're getting better quality devices, allowing them to use Snapchat, and it's presenting a whole other opportunity for these guys. However, there are some negatives that we want to highlight. Number one, they just issued $1 billion in convertible notes for 2026 or 2027, and so it kind of makes sense, but not quite, because of the fact that their stock price is near all-time highs. Why not go ahead and just release the equity, get all of that money? You don't have to, and it just makes sense, right? There's no stipulations with releasing the equity. They want to do the convertible notes. So I'm not quite sure the advantage there. If you guys have an idea, feel free to let me know in the comments below. Again, another possible negative here, is that they are highly concentrated in the developed countries. If any interest were to ever fall off on Snapchat inside of their main market, you would see some value taken out of the stock. Again, they do have the competition with TikTok and Facebook, so it's just a race to innovate here. And then foreign countries, especially the ones in Europe, potentially some of the ones in Asia, they say, hey, if you're going to be active in our country, we need a piece of your revenue. We need your company to pay us money to operate here. And so there's an ongoing battle right now. I think currently with the administration, we might see a lot more headwind placed into big tech. So just some things to keep your eye on there. Not necessarily that it's going to happen or that it's set in stone, but just things to be cautious of and to prepare the way that you invest. Key metrics, this is quite significant. 66% increase in revenue year over year, almost unheard of. Their average revenue increased per user 36% year over year. Q1, they in their GAAP earnings reported negative 19 cents EPS. Price to sales almost a little over 3 times higher than the industry. Because they don't have any earnings or any positive earnings, you have to use price to sales. Really, all that says is that investors now are paying 33 times more than what this stock price actually is, right? Or what they're paying 33 times more than what the sales are. And so it kind of begs like, okay, this might be a high performing stock, obviously a ton of growth here. What are the investors paying for? As far as track record goes, we have seen a positive increase or positive earnings growth in 3 of the last 4 quarters. So that's a good sign, right? And then as far as volatility in the average true range, so taking the range between the highs and the lows of the daily stock price move, between the 5 days, the 20 days, and the 60 days, there's about a 5% volatility there. So just to keep your eye on here, estimates and guidance going into Q2, estimated to have, this is coming straight from the company, anywhere between 820 to 840 million compared to 454 million in Q2 of last year. So nearly 100%. That is absolutely insane, and most of it's going to come from the advertising. We'll see EBITDA, so basically their earnings before all of their interest and taxes and all that, between negative 20 million to break even compared to negative 96 million in the same quarter last year. That is quite significant. I think that's something that's almost undervalued right now. And we can see the earnings growth. It's just going to it's estimated to get better and better each quarter. So a lot of things to look for there. And so when we put together the macro, we put together the industry look, some of the metrics, I think it's very possible to see this stock doubling within the next 6 months. I think that's something that's very possible. Doesn't mean that it's going to happen, but all the things that we can gather, all the evidence would point to a very quick increase in the actual stock price. So how to trade it? Obviously, you can go buy the stock. We call it buying the equity. You can buy it. However, Snapchat's trading around $60, $62 right now. In terms of actual dollar amount, that could be a little bit expensive. You might not get as much exposure as you want to the company. And so something that we've been talking about in our group is using the options and keeping our cost basis low. So we could go buy the options right now and we could pay at the money. You can see in the chain about $6.8 for the in the money option. However, we can create a spread and we can do it a little bit better and cheaper and obtain a significantly higher risk to reward ratio. One thing you could do is do the ratio spread or the debit spread. And we go over all that about how to do it inside of our group. But the main point here is keep your costs low and then also keep your risk to reward at least over 3. By doing the ratio or the debit, you could hit anywhere between 5 to 8 risk to reward ratio, which is actually significantly high. Keeps your exposure low and you risk the minimal amount of capital. So again, this is just my opinion on it. It's opinion, not advice. But this is how we're seeing the company. We see a lot of significant upside to it. We're super excited for it. And so definitely, if you guys like this video, just like it, subscribe to the channel, and then check out the link for our Discord below. Have a good week.